Hey, what's up, everyone? Welcome back to another video. In today's video, I want to talk about income investing, what I thought it was, and what it turned out to be for me, my views on it, and currently how it is affecting things in my own life. As always, though, you guys, nothing here is financial advice, and please go ahead, smash that like button. I really, really appreciate it. We're going to start off with the backdrop of the current markets, the bloody, bloody red market today, and possibly for the rest of the week, depending on how things go. But the reason I'm starting here is because I just want to show you guys something. When I first started investing, I was in real estate. I was looking for, kind of a different route to invest, something with a bit of a faster path to financial freedom. And I'd heard about dividend investing, and basically, you guys, there was companies like this: Starbucks, Royal Bank, and Home Depot, just to name a few. Without getting too deep into the weeds. But basically, guys, I had accepted the fact that I was pretty much going to have to build a portfolio of different companies, dividend payers, with small yields. Like this one's 2.5%. I think Starbucks is, yeah, 2.5%. A lot of them just around 2, 3, 4%. A lot of banks, stuff like that. But basically, I had accepted the fact that I was going to have to build this dividend portfolio with all these single stocks, manage them myself, keep track of everything. And then basically, the idea would be, if you had 100 stocks or 150 dividend paying stocks, you would get paid, every month, maybe a couple times a month, because a lot of these companies pay quarterly dividends. They don't pay monthly. So you would get your dividends from, Home Depot in September, and then, Royal Bank might pay you in October, and then Starbucks would pay you in November, December, whatever. And you would just try to set it up so that you were constantly receiving dividends. But as you guys can obviously see with those low yields, you would need quite the portfolio to generate anything meaningful. But that was kind of what I figured, things were going to be. And fast forward to now, where we basically have take your pick of covered call ETFs. We have, tech focused, we have crypto focused, we have stuff like HHIS, which you get a little bit of everything, as well as like some of the blue chip names like Costco and Eli Lilly, and all those good ones. We have HYLD and HDIV, which continue to evolve and just get better over time. We have the indexes with USCL. Guys, I could go on and on about all of these, but at the end of the day, what I'm trying to get at is you can basically choose which sector or which stocks or which asset classes that you like and that you want to invest in. And you can invest in those and get a monthly paycheck from your investments. And hopefully, the idea would be is to ride that upside over the long term as well, like you can see here with HDIV and many of these others. Even Canoe EIT, has had some very good gains. So that's what I'm saying, guys, is basically I had thought that, dividend investing was just going to be building out this massive portfolio. It was going to take a lot of time, be a very slow roll to financial freedom. But what ended up happening is my wife and I sold all of our rental properties and had basically a large cash injection because we'd also sold our principal house. And we're able to build a pretty meaningful portfolio now where the income produced from this portfolio, it's far more than I was really ever making at work. And I made about $100,000 a year at work, right, guys? But if you've ever made about $100,000 a year, depending on which job you had, you're not taking that home with you, because taxes take a good chunk. And then in my situation, I had union dues and pension plan dues and health benefits and things like that. None of those are bad things necessarily, but they eat into your monthly paycheck, right? So the big difference for me now is receiving these dividends. In June is going to be over $8,000, and it's you receive every dollar of that. You get that money, and you get to decide if you want to spend it or how you spend it or how you invest it for your future. And that's the big difference, you guys. And basically, guys, if I had to sum it up, income investing, it saved me from I don't know how many more years of shift work, because I've been doing shift work since I was about 20, and I was finding it was taking its toll on my body, physically, and in a lot of different ways. And a lot of night shifts and swing shifts and rotating, days to nights and stuff like that. So I'm very happy and very thankful that I discovered this type of investing, because what it's allowed me to do is basically leave my role in shift work many, many years earlier than what I could have. I think, if we would have stuck with real estate investing, we still would have been on a great path to be financially free eventually. But this basically just fast tracked everything. And as we know with these investments, right, your upside capture can be, it might not be as much as what the markets are doing, right? But then you see that there's these leveraged funds where the idea would be to try to capture more of that upside. So to me, it's a good trade off, because again, not only am I receiving income that I can spend and reinvest, but the more important piece is being able to live a more healthy and free lifestyle than when I was doing shift work all the time and away from my wife and away from the house, and awake all night and losing sleep and all those things. And just, that's the biggest piece for me, right? So you do hear some people say that there's more to investing than just the total return on paper, just the numbers of the 24% and whatever. All that stuff's important, you guys, but at the end of the day, my plan isn't just to retire and leave, or one day pass away and just have a whole pile of money sitting around. It's I want to scale. I want to plan to continue to scale and build this portfolio and build the income and the net worth, yes, but having options and being able to enjoy life is very, very important as well. One more thing I'll add, it's just this portfolio has been performing better than what I actually had expected. So we're over $8,000 a month, and it's gotten that way mostly because I made a few changes in the portfolio. I scaled back on my USCL position, and I went with the day maxes. So I added to the day maxes. We'll jump into the we'll jump into this here. So right now, HDiv is my top position, 19%. HYLD is slightly behind at 16. Then HHIS, that CDAY is about 14%. Canoe EIT is still over 10%, 11%. So there's going to be something happen with Canoe EIT in my portfolio. I will keep you guys posted. I'm going to be doing something with it. QDAY is close to 10%. USCL has been scaled back to about 8%. ENCC is 5%, 5.5%. I am thinking of making a swap with this one too. I'll keep you guys posted. And then I have my Bitcoin fund here. It's very meaningful. You guys can see 0.4%, thankfully, because you guys can see how Bitcoin's been performing lately, which is not great, unfortunately. I'd love to see Bitcoin rally back up, but it's been having a tough year, down 41% since the last year. So it's not great. Anyways, guys, it's kind of just an overview on what I thought dividend investing and income focused investing would be, because I treat it the same way. I treat this portfolio the same way, whether I had a portfolio of dividend paying stocks or these covered call monthly income ETFs. I would treat it the same way. I would basically spend what I need to, and everything else would be getting reinvested back into the portfolio. And that's the plan, right? That's how you build wealth. That's how you scale income, is by reinvesting, especially with some of these high yield ETFs. The higher the yield, I would say the more important it is to try to reinvest some. There could be arguments that, things like HDiv and HYLD and stuff, they've been increasing payments. There's maybe not quite as much need to reinvest. And then if you went even lower yield with some of these single stocks, you try to pick the good companies that increase their dividend year over year. But, it's the same concept, you guys. The more you put in, the more you're going to get out. And that goes with everything in life. So I'll just end it here on this one thing. I had a comment recently, and someone asked me, how long will it take me to get to $10,000 a month, or like what is the time frame, right? Well, I have this goal down here. Basically, it's like $100,000 a year, and it's 99% of the way there. So I have to change that. But to answer that question of reaching $10,000 a month, there are people out there with smaller size portfolios that have over $10,000 a month. So for me personally, I would love to try to get close to that within the next, year or two, but I think it's going to happen sooner. Um, and I'll just tell you guys why. Because I have a pretty low yield fund here with Canoe EIT. You can see the yield is 6.9%. And it's, the big problem here is it's not increasing its dividend. It's a great investment, great total return, but it's not been increasing its dividend. So to put it simply, what I would do is sell off my shares of Canoe EIT and just put it into something higher yielding. It wouldn't even necessarily need to go all into HHIS. I would probably spread it across a few things, but by trading off Canoe EIT, and not selling it and getting rid of it, but just swapping out of it into another investment. So by swapping Canoe EIT, and then even a small swap out of ENCC, because I am thinking of swapping out. Actually, I'll show you guys real quick before we end this video. CMCL. I know it's been talked about lately. It's a pretty new ETF, but it pays semi-monthly, which I like. It has some light leverage, which I also like. And the other thing I like is that if you look at the holdings, ENCC is the top holding at 33.6%. You've also got gold, copper, silver, lithium. You get a little bit of everything in there, right? So my thoughts are, and I've already done the numbers, I could swap out of ENCC, and I am up on the capital. My cost basis is about 28,000, and the current value is about 35,000. So I would make a profit. I could swap out ENCC and swap it into CMCL. That would increase my monthly income as well as give me another twice monthly payment. And then this is the big one, guys. Canoe EIT, I would just swap that out. And as soon as I did that, or even just a combination of those two things, I would be definitely over 9,000 a month, probably very close to reaching 10,000 a month, because I do typically reinvest a good portion every month. I haven't done a budget video yet, but I went traveling last month, and my wife and I definitely blew the budget. There wasn't much for reinvesting, but I did buy a couple things. What did I buy here? Yeah, so here's what I bought. I did buy 126 shares of HHIS, 12.7 shares of QDay, 20 shares of HYLD, another 25 shares of HHIS, another 31 shares, 31.5 shares of HYLD, 10.7 shares of HYLD, and then I did buy some more QDay at 8.6 shares. This is a pretty low that's a pretty low reinvesting month for me, you guys. Like, I typically put a lot more back into the portfolio than this, but nonetheless, I still got to put some in and pay off the credit card from our travel. Anyways, you guys, I know this was a little bit longer video than I planned. But to sum it all up, I really am very thankful and very pleased with these investments and finding the PII style and the income investing style. It has changed many things in my life for the positive, and I hope it continues that way. All of the funds that I've selected and I've been invested in, I've been overall happy with the performance. And I know a lot of you guys, if you're watching, you probably hold some of the similar funds, if not some of the same exact ones. They do go up and down with the markets, right? So, we can't blame the fund, but I want to say that, the payments have not been missing on any of them. And the performance has been a little bit more even than what I expected it to be, which is just a bonus. Anyways, you guys, I hope everyone out there is having a great week. Leave me a comment, leave me a like, and I will catch you guys in the next video.